Welcome back to Golden Roll Radio. The markets, the gold price, and hi-ho silver.
Hi-ho silver.
Boy, this is fun. We've all been pretty busy here taking calls and talking with clients, and want to talk to you guys this week about how we might look at the gold price now that we're in uncharted waters. Also, the numbers on silver and platinum. So let's jump right in.
Sure. I think it is important to point out that we are in uncharted waters, I think is a good way to say it.
In many ways.
Yes. And everybody and their brother is going to have an opinion. So here's mine. None of us have any idea what we're talking about at this point. We're going to do our best.
From a technical standpoint.
Yeah, exactly. Do our best to speculate, do our best to look at historic pricing and historic percentages and where we go and how it moves in and out. And as this market starts to figure itself out a little bit, it's going to get easier over the next 6 months to kind of try to pick some reversal prices and all. Because as everybody knows, gold's done nothing but up for a number of years now. And it's really done nothing but up for the last couple of weeks. I mean, to the point where we've hit parabolic increases in the price of gold. So the immediate response to that's going to be, well, anytime you go parabolic, you've got to have a pretty massive reversal. And you're seeing a lot of that news out there. So I just wanted to point out a couple things in previous markets to show that it's going to be very difficult for just about anybody to get this right. So encouraging all of our listeners, be very wary of me or any other technical chartist out there telling you that they know what's going to happen, because we don't.
With the gold price being an argument.
Specifically the gold price. I think we still have some stuff to say about the white metals. So looking back at gold, 2007, we break the all-time high. We have a 61% rise to put in a new all-time high at about $1,150. And pretty shortly after is when that 2008 stock market crash happened. Gold comes back down with it. We lose almost all of it. So there's a case where you have this parabolic rise up, and then within 6 months, you have a complete reversal. Following on the heels of that massive drop, gold starts to rise as some panic selling out of the equities market pushes money into currency, pushes money into safety assets like precious metals. You have this other rise up. We break past that early 2008 high. So we're back above 1,200. Same thing happens. We have a parabolic move up to around 13 or so hundred. And again, we get an immediate reversal, but we only gave up maybe 25% of that rise. So here's an example where the market does something completely different. We have a big jump against the previous all-time high. The one in 2008 wiped out the whole thing. The one later in 2008 into 2009 barely scraped anything off the top. And then, of course, we followed with that 85% or so rise all the way up to the inevitable all-time high 1900 in 2011. So let's push that timeline forward a little bit, right? And look at the switch from bear market to bull market in 2019. Well, we had this 3 drives up pattern, and we put in about a 24% rise in a short period of time. But just like the 2008-2009 high, we had a very, very minor correction. And as everybody knows, you take COVID out of there in March, we've done nothing but go up since. So there's no reason whatsoever you have to have a reversal here at this point. It's happened sometimes, it's not happened other times. So you really have to play this market out. And if you're not already in a solid gold foundational position, you really need to be looking at this from the standpoint of where do we think we're going eventually, not how do I nickel and dime an extra $100 an ounce out. Because what scares me is by waiting today to potentially get $100 or $200 drop, are we giving up potentially paying an extra $300, $400, $500 more if we do end up just trickling up from here?
I would say, too, we mentioned last week the silver chart from 2010 to the spring of 2011, total case in point. You never did get a legitimate pullback or a breather to give you the opportunity to step in. You missed the entire run if you waited, as it went and set its all-time high at $49.75, $50 an ounce. 2, you shouldn't be basing your gold buying on chasing the price anyway. I'm saying solely. You got to look at the underlying fundamentals. Why are you owning gold? Why are you diversifying your portfolio into the tangible commodity? And those underlying fundamentals we'll get into in a bit. But those are only building. So technical analysis and price predictions aside, you got to look at the fundamentals right now with your portfolio.
Right. And I think it's important that we remember, obviously, a number of our listeners are clients, a number of our listeners are already pretty substantial gold holders and enjoying this rise. But there are people out there who are maybe looking at this market for the first time. And it's to those people that we want to caution you to be too aggressive with your entry points and caution you that it's very likely you could end up hoping for a better price to end up paying a much higher one.
So before we jump to the silver chart, I want to say quickly, if you have an issue with trying to find silver at good prices right now, we don't have any issue with availability. We also have a lot better pricing that I've noticed out there, and we'll give you advice on it. So I think it's a win-win-win all the way across the board. Just from the current environment that we're in, silver's rising. There are places out there you can't find it. The pricing is ridiculously high. So give us a shout. Be happy to talk to you.
Don't get pulled into high premiums. You're right, Robert. I appreciate
agree.
You bringing it up.
We've been selecting certain products because of availability and price, mainly price. And I think we can do better than most of the industry, if not all.
Yeah, I agree. Show us the charts there, Miles, and explain why everybody should be buying silver.
Sure. Do I need to say anything, or can I just put this chart next to the gold chart? So looking at the silver chart, obviously we are, like you said, still got about 40% to go, basically about halfway there compared to what gold has already done and then some. The nice thing about that is it does give us some track record, some history to look and be able to say, here's where we could see the market decide to take a little bit of a break, take a little bit of a pullback. Silver, of course, also parabolic. If you were the one guy on the planet that happened to buy right amidst the COVID at under $12.50 an ounce, you've doubled your money at this point, so congratulations. We've broken through that previous floor. Going back to like 2012, we're now above that. I would argue our next stopping point could be that last little right shoulder beginning of 2013. That'd be about 28 and a quarter. But the number I really like is a little over 33, and I think I've pointed out 32, 33 as a potential turnaround point for a couple reasons, because that's the high point, the last attempt silver made to continue the bull market before it finally turned down in 2012. That also lines up the 618 fib to the penny right at about 1988, which is the highest price we had in the bear market between 2013 and 2019. So you've got a couple little fib line up here, as well as some price action from 2012. So eventually I think that we see that 33.20 or so price be somewhat of a ceiling. Now, if that's 2 weeks from now or post-election, I don't know. We'll see how the market plays out over the next couple weeks. But if this bull market continues up or just sits sideways here for a few days, letting the RSI come back down without having to have the price take a pretty dramatic fall, that'd be the next target high side point that I'd be looking for.
I don't know about you guys, but it seems like just about every client's asking how high is it going to go and how fast. And we can't answer that. So I hope you hear us from a technical standpoint, but I'm going to bring up 6 key fundamental reasons that gold and silver are climbing right now. One, the U.S. dollar, right? We've seen it turn down, and we'll get into that here in a little bit, but its decline continues, and this is a debasement of the dollar. Total debt now at $26.6 trillion, debt to GDP at 137%. So that's one, weakness in the currency. 2, the COVID-19 crisis. It's not going away. If anything, it's getting worse. So we've got increased economic concerns and shutdowns. And to our point, we just had the worst second quarter numbers in U.S. history. GDP down 32.9% last week. And that's going to be something that has to be, again, absorbed over the coming years. 3, you've got Congress debating the next stimulus measures. That's got a lot of people realizing that the dollar should turn down further. It's going to increase the debt. So they're coming to an agreement. And that should be right around the corner. And you're not going to make that up by raising taxes or interest rates. That's not a feasible option. So that's going to be a drag on the economy for years to come. 4, negative real rate of return right now is significant. That is absolutely driving gold. And gold will continue to climb until you get a positive real rate of return. How many years out is that if you've listed these previous ones?
Yeah, I think that's a really good point on the actual rate of return.
Yeah. Where can you get a return on your dollar? Yeah, the Fed wants interest rates low right now, but all that means is you've got to find safe havens. And when safe haven buying is ramping up as a result of asset preservation or any return on your dollar, gold obviously is going to be in a very strong market. 5, shorts have been chased out of the futures markets, right? I think you guys would agree that's why we're seeing such big moves in such a short period of time. You don't have any downside pressure in the futures markets that are countering these long positions. And then you've got the election, right? The uncertainty of the election. And what I'm not mentioning is point number 7 is geopolitics. And going back to those chasing the shorts out of the market, we had 9 tons of gold move into ETFs yesterday alone. You're talking about a huge number of dollars. And there's so many more dollars in the system than there were in 2009, 10, and 11. So much more money's been created since then. So the numbers are going to be huge. Don't compare the gold price to its previous highs. It's obsolete. You got to compare it to the number of dollars in circulation compared to back then.
Well, rounding out the white metals, I think we've got a bit of show tunes here, right? Because anything gold can do, silver's probably going to do better. And I'd extend that on down the line to platinum. Platinum really looks like it's going to do the same breakout thing that silver did. It's still got about $40-$50 to go. And then obviously, like we said with silver, you always wanted to come back and test that old declining ceiling that you had, but silver certainly hasn't done that and may not, and platinum may not as well. So we could see a breakout here in platinum in the next couple of days, assuming gold and silver at least hold steady, if not push up a little bit more. Obviously, if we do have a corrective move from here in gold and silver, then platinum should inch back down as well. And you can kind of say the same thing about palladium, right? I mean, palladium came into that right shoulder we talked about a couple weeks ago. We took a reversal back down, but palladium hardly dropped at all, and it's starting to push up too. So all of the metals are showing their strength. Everything from gold, silver, platinum, palladium that we deal with, but as well as even some of the industrial metals are doing okay right now too, despite lagging industry.
So jumping over to the U.S. dollar, the dollar has been bouncing a little bit here, looking like it might want to put in a little double bottom. We drew that long-term line that we talked about way back a few years ago when we first started this show, and it's coming right into that, almost into it. And so maybe it's finding some support here. I'll throw out a theory that maybe it's been declining leading up while the discussion of the stimulus package has been talked about, and maybe it's possible that once the stimulus package is announced, maybe it's time for the dollar to rally. Just a possibility. Just
sure.
Throwing that out there.
Would you call that like some buy the rumor, sell the news, or in this case, sell the rumor and then buy the dollar?
Right. Sell the dollar on the rumor that we're going to have a stimulus package, and then when the stimulus package is announced, the dollar goes the other way and it gets bought. That's possible. Not saying that that's going to happen, but definitely going to be watching for that to happen, because that might be what's going on here.
Sure. That lines up with the arguments that we just had with gold and silver on the other side. You have that much upside. Everybody thinks it's going to take a breather at some point, so you can argue with the U.S. dollar. We've had so much downside on the U.S. dollar that for it to take even just a 10 or 20% pop back up before it takes its next leg down, I think that's definitely a possibility.
Yeah, that's the other question that we're all getting asked. What could cause it to turn down? What would actually give us a pause in these markets that are so strong? And that's a big one. If the dollar does have a little blip and a little short-term rally, to me, it's not the macro trend. It'll be a microcycle event and then turn back down right as it absorbs all the stimulus. But that can certainly cause gold to come down. Silver catching up and narrowing the ratio significantly. So that ratio has come all the way from almost 130 down to 76. If that continues and we get down close to that 2011 low near 31, that could also signal a top in the gold market, at least temporarily, where you would see a pause in the prices. Certainly good news on the COVID front. If you see a significant decrease in numbers, that would do it, or a vaccine, right? Some real positive results in a true vaccine that's going to be put into circulation. That, I think, could cause the gold price to come back down. And this is all pre-election. Like, obviously, something's going to happen election-wise. But then the other thing is you're 14% above the 50-day moving average right now in the gold price. That's too high to me. That speaks to me of an overshoot. So personally, I think we see 2100, but I also think that we should realistically expect us to come back down into the 1900s in a very healthy market. Would you agree, disagree?
Or we see 2100 and then it just sits there for 3 months.
Yeah.
And the moving averages get sucked up to meet it.
That's right. That's the other thing.
And that's what I was trying to
point.
point out earlier when we were looking at some of the previous market moves when we had these massive breakouts over the last 10, 12 years.
Yep. They're circling all the way back to the start of the show. You run the risk of missing that. Is $23, $25, $100 gold out of the question? Absolutely not. When do we get there? Can't tell you.
So closing out the show, just be aware that the Dow Jones is trying to push itself back up and argue continued bullish territory. We're still obviously well below the February highs, but it does look like it may be having a little short-term breakout here, push up and maybe retest those. Now, if what we just said about the dollar is accurate and the dollar rebounds up, I'd expect the Dow to get crushed hard. Maybe a couple thousand points down, and I think that's going to scare a lot of people, especially leading into the elections. So be prepared, keep an eye on your 401ks. I don't like the dollar either, but sometimes being in the life raft with the least amount of holes in it is still safer than being on the main ship.
Keep in mind, too, we didn't even talk about geopolitics like the explosion in Beirut yesterday. Even though it wasn't an attack, you still saw markets react very quickly in a short period of time on the rumor and then on the reality. So you had volatility up, including silver, 50-cent swing in silver between the rumor and the reality. So the metals and other markets are still going to react to some major geopolitical event. And so keep your eyes out for that as well.
Thanks for listening. That does it for Golden Rule Radio this week. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, follow us on the website, McIlvaney.com, or give us a call, 800-525-9556. Thanks for listening. Have a great week.